We watch the major ones, the corn, the wheat, cotton, soybeans, but sometimes we miss some of those underlying, like soy oil or soy meal. Do we need to focus on those?
Always, because specifically with soy oil, you have the biofuels department there, but soybean meal is so crucial to aquaculture, poultry, pork production, that we tend to forget about things like that when all the grains are really lower and we see the farmers suffering out there, the low prices, but it also makes opportunities for others. And soybean meal is one of those opportunities. When we look at corn, it's got carry all the way out to it. So if I'm going to buy corn, I need to buy it today. Well, then I have the same storage problem as everybody else. When I look out into soybean meal, there's very low carry out there, and on the front end, it's inverted. We're trading the spot month higher than the rest of them. So why not look at that opportunity where I could go out with a very low carry, own call options in May, July, some month, which gets us away from this crop. And although we're under the impression that this year's crop is going to be great for soybeans, our next real market mover is going to be South America. Is it too dry? Is it too wet? Are they going to get a crop in? Is it going to be bigger than last year, less than last year? All of those are going to come about in less than 2 months. Once that starts happening, we may or may not see soybeans start to react a little bit differently, but we're trying to capture something while it's available. And it may go lower, it may go higher, but when it's $175 off of a one-year high, it's $85 off the last 4 months off of there, and nearing, probably since 2016, the lows within $20, $30 of meal. So we're looking at a little over $300 for meal right now, when we've been $400 and $480 just as soon as this time last year.
Wow. So that's soy meal. Soy oil, again, we're using that in some biofuel production.
Absolutely.
Which is kind of interesting because that unrest in Libya could start pushing oil prices higher as they cut the output. So how will that affect some of our other markets? Well, how about we come back and visit about livestock, and we'll throw crude oil in there as well as Market Day Report continues after this. It's Market Day Report. Our in-studio guest is Chris Swift with Swift Trading. We'll get Chris's take in just a moment on these markets. Live cattle futures are moving higher. Front month up 120, 184.80. October most active at 178.60. It's up $1.62 and 15 cents off the day's high. For the feeders, we've been moving higher as well, except for the August contract, but September is a half buck higher at 241.85. And for the hogs, what's happening? Higher across the board. October at 81.10, up 70, and the December at 71.12, up 42. Chris, when we talk about livestock futures and we get our cattle on feed report, I found something kind of interesting. As one analyst said, the placements does include the beef on dairy numbers.
Yes, that's exactly right.
And the difference is we're moving those beef on dairy in earlier at lighter weights.
Correct.
And we're feeding them longer. So obviously, when you're trying to compare this year with something 10 years ago, it's going to be hard to get an apple-to-apple comparison.
It is for a while, but remember that this has been cooking in the background for close to 2 years now. So what we're going to see is a lot more of those cattle that were placed 2 years ago, a year ago. They all are finishing now as we're gaining more and more capacity to be able to feed that beef on dairy cross. And interesting that you mentioned that. We always seem to have unintended consequences when we do one thing, and what we have noticed that by pulling heavily on the cows, the dairy cows, we all of a sudden find ourselves a little bit short of milk. Milk prices have exploded the last several days. They've been up for several months, but just over the last couple of days, we've seen some large swings in milk prices, and a lot of that due to it. We're seeing fewer dairy cows being slaughtered right now, and this is kind of a culling time of the year. And we've seen Dr. Darrell Pill several times show those charts on there, how much we have been really culling the herds down. But some of that, if you think about it, if we're really low on that dairy cow slaughter, probably, it's not the lack of dairy cows. Some of those older cows are now being put into beef production, and it's literally identical to what we saw in 2013 and 14 when we held back old cows that probably should have gone to slaughter. If we can get her to have a calf, we're going to be profitable by $300 to $500 a head more than if we just took her to the slaughter plant. So I have a feeling that in the background, it's hard to see, but that's a little bit of things that are kind of simmering in the background that has kept beef production now higher year over year when nobody thought that it was going to be, and still the lower actual cattle production out there.
And I can still recall the days when you could go and pick up a calf.
Sure.
A newborn calf at a dairy, you know, and you'd bottle feed it and finish that thing out if you could, you know, keep it alive. And now look at where we are and how the industry has changed.
Oh, it's absolutely. They always find a way. This is the most industrial nation that I've ever seen. When you ask somebody, say, I've got a problem, everybody rushes out and said, let me show you how to fix it. And they did.
There you go. Fixing things with Chris Swift, Swift Trading.